Good afternoon, everybody. This is Chrissy from SolsticeATR. This is our website. This is my handle on Twitter. This is on Discord. Remember, this is an educational video. We're not a broker-dealer. Past performance doesn't indicate future results. We have, in the coming week, one more day before the election. Does the election by Tuesday get us the results, or is it going to take us a little bit more longer to count the votes? So before I can be either biased to being a bullish or bearish, we have to look at historical markets between the stock market, the bond market, whether we're going to be on a recession with a crash, or we're going to have a bullish epic rally after the election. So we're going to trade what we see, not what we think. And I hope this will help you, my intro, not to be biased to one side. So we got one more day, trading day before the election. We can have either a crash, which becomes a recession, or a monster rally, which is a bullish rate of return. I will go over all of the scenarios that can happen, so we're not biased to either side. This week we had an ugly week in the stock market. You can read this slowly. We can have either scenarios. We got election. We got the COVID-19, which we're looking for a vaccine. The stock market or the bond market can be bullish or bearish scenario. Reopening of the global and domestic marketing or closing up. We're going to look at the SPY, which is the ETF. For the ES, the QQQ, I put SPX here by accident, IWM, RSB, SMH, you can do those on your own, KBE, TNX, I'm covering everything, JNK, AGG, IEF, TLT, the VIX, SCHX, SPHQ, SPLV. The futures is the S&P 500, Nasdaq, Russell, Dow, gold, oil, bond, Bitcoin, and ETC. You can look at, commodities. I've put Apple, AMGN, Alexian, ABBV, some biotechs, AMD, Boeing, BABA, which is an Asian stock, Costco, Facebook, Google, Lulu, Spandex. We call it Spandex. Lockheed Martin, MELI, Microsoft, Netflix, NVDA, PayPal, Shopify, Tesla, WYNN, and ExxonMobil. Trade the charts in front of you. Don't be biased, be flexible, be fluid, and let the market give you its trend. Okay, I hope this was really helpful. You can pause this to take a look at it later on, and at the end I will put it back on for you. Here I have the combination of those four instruments. We had a bad week last week in the stock market. We had a 1 week basically decline in the market. This is last September. Rally up, came back, we rallied up, came back in. We're still not below the whole month, but we came back on a linear regression channel, which we are holding. We can connect this dot here, the low, with this one here, and you can see we are in a linear regression channel. We are holding the 50 simple moving average, but we lost the 18 simple moving average. Either way, whether I put this channel up here or the other one, we can create a fan so that way we can see the Fibonacci. If we're gonna fall, we can go as far as the 38.2 on the weekly charts, or we can just reverse and continue higher. Remember, we have those gaps from the June, July, and August setups on the prior annual last year, February till March 23rd, the dump and the rally back up. These scenarios can be an uptrend or a downtrend. We are in a linear regression channel. Once again, trade the charts in front of you. Okay, let's go now. Take a look at the daily charts or the 4-hour charts. I'm going to narrow them down to a faster time frame, so we are not biased to any side of the industry. So we're going to go to /RTY, which is the small cap. This is the weekly. We are still in a linear regression channel. This is the high and low from February till March. We rallied, we came back, but we're still holding last month rally up. So let's take a look at it on a 15-day or 15-day 4-hour chart. This is the reason why I am put this 15-day doesn't show you us as much. We can go to time frame instead of making it 15. We can go to 30 days so you can see what just happened in the last month or so. This is the push up. We consolidated for a couple of weeks, then we fell down last week. We tried to rally on Thursday but couldn't, and on Friday we had a nice reversal back up into the highs and lows. And if you can look here in the RTY, you can take a look at the high and low of this candle, and you can see that the weekly range from last week Friday high and low, we can anchor this with a Fibonacci to make sure we can trade either sides before the election. We grab the Fib, we connect the bottom, which is the weekly low here, to the weekly high on Sunday. This was Monday. This was Monday. This is Friday. So we can connect it to here so we're not biased to either side. We can, fall down as far as the 161 or double the extension, or we can reverse and go opposite direction. So remember, we are underneath on the 4-hour, the 116 simple moving average and the 200 on the daily. A lot of people do look at it and they go, okay, what is the daily at? Where's my 200-day simple moving average? And you can see my 200 and 116 is holding it okay so far. So we're not going to be biased to the small cap on either side. We trade the charts in front of us, okay? So that's the Russell. Let's take a look at the NQ, the Nasdaq 100 more weekly, move way down due to the report in Apple, Amazon, Facebook, Google. We had Microsoft, Netflix, and TSLA report in the last week or so. Unfortunately, the last 2 weeks in the Nasdaq 100, we have came back a little bit more down. We got to trade the charts in front of us, not what we think. And if you can go to from August when we rallied in September, and we came back. This is the low in September and this is the high. We're still above the September range, but if we look at the June July area here, if we zoom down, this will give us a better idea of the consolidation before the breakup. Remember, this was the annual high when we fell down in February till March. Then March we had a nice rally. Is this forming the same formation as this to come back down due to election, or do we get a reversal and continue higher? So I do not want you to think I am either bearish or bullish. I'm going to trade what's given to me on the charts because we are in a linear regression channel pointing down, which can be considered on the weekly or monthly chart a flag, or can be resetting to do the same scenario here where the bond market, the TLT, the TLT, which is the bond, the ZB for the 30 or the ZN for the 10-year, we can take a look at them and understand, hey, if there's a change, the bond market rallies, the yield gets, the price is higher, the yield, if interest rates are lower, price of the bond is high. If interest rates are higher, bond price is lower. So we're going to see what are the scenarios on either side, and this is the Nasdaq 100. Let's take a look at now the Dow Jones Industrial Average in relationship to where we are today. If you can see the monthly chart, we fell down, we touched the 200 SMA on the daily and bounced back. This was the annual high for the year. We looked down in March, came back up. We had lower highs, higher lows here as well. This is a higher low. This is a lower low from the prior month. Does this hold to continue back up, or do we fall and lose the 200 SMA and where we broke out of, come back and retest the 61 or the 38.2% fib? Because if I draw it the other way, that would be the 38, that's the 50, and that's the 61. Now this 38, this is the number that it should act as support. If not, it will fall all the way back to this area from the March, that H pattern that we had in February where we fell down all the way here. This has to support in order to continue higher, or we will end up on the other side. So now let's take a look at the ES. That's the S&P 500. Let's take a look at the scenario on it. We had a higher low from the annual. This was the February. We fell down. This is the same scenario setup. We are sitting on the 116 simple moving average. We are above the September lows. If we lose this area, we're going to look for the backside of the breakdown and a 200 SMA. And, as far as I am concerned, we're going to trade what we see. And this is the June and the August before, we took off and headed back higher. If this is going to act as support, we have to consolidate in this area to continue higher. And if we fall through it, there's nothing to support us till the 2850, 28, 25 area before we can continue back up? Or do we reverse from here on election and continue higher by creating a W-shaped formation and we clear the linear regression channel? So what I'm going to do is zoom in a little bit to show you what I'm looking at. Remember, I have the monthly fib from high to low, and you can anchor the weekly fib from here to here, which is the last 5 days. We can do it on a 4-hour chart so you guys can see it, or 15. We can grab the 15-day 4-hour chart. You anchor the slope here, just to show you how to do this one more time. And we anchor the Sunday night high, which is right here. And this is the scenario. If we're gonna, come back, that should be the 30. I did them backwards, which I am my mistake. Let's just reset it. I'll do them the other way so you guys can see and remove drawing. And if I think there's going to be a reversal, we grab this candle here to this low here. We anchor it. And this is basically understanding that Fibonacci, if we're going to go back up, we got to clear the 38, clear the 50, and the 61 in order to continue from the prior week, that small H pattern where we fell down. We created it, but on Friday we came back up because due to the fact Monday is the last day before the election for the year. Do we continue higher or the outcome become a recession? It's unknown until they count the ballots. I'm not trying to be biased to either side because I know where I stand on the election. I'm more conservative, so I don't want to go into it. I'd like to see the market continue higher and the recovery coming back to normal for everyone, going back to their work, opening up stores, economy, going back, traveling around the world right now since this situation because of the COVID-19 pandemic. I don't want to sound, bearish or bullish. I hope that things do change. Different than being a trader, we do not hope. We trade what's given to us in front of us, and being technical and trade psychologically the indicators that's in front of us, whether it's the momentum is bullish or bearish. So I hope this was helpful. Let's take a look at the scenario. We're looking at a couple of stocks. This is Apple. Show you what happened to Apple. I have the anchoring on Apple. You can see the 5 days. Usually I look for the 61, 50, and 38, or 38, 60. Usually if you draw them the other way around, that would be the 38, and that's the 61 coming back to them on the way up. And I'd like to see things do change to the upside. That's Apple after the earning report. Amazon. I'm just going to put the same thing here. This is the earning report. It looked up and fell back down. That's Amazon. AMGN, I'll show you the biotech too. It fell down. This was a couple of weeks ago. I had the fibs from there. We did more than double the extension. Fell back down, removed drawing. Let's look at ALXN. I haven't done the biotechs for a while. I have those fibs on them. So I'm not going to be biased to either side. I want you to trade what we see. If you can see from the zero line, when we were trying to recover, we eventually fell down to the bottom extension, removed drawing. And you can see we fell back down to the 38.2 fib. We looked at the 61 and fell back down. Do we this access support to continue higher, or do we fall back down to the zero line of it? Let's take a look at Baba. Here's Baba. I did the anchoring for the week. So your 38 and 61 would be inverted. So that's Baba. Let's take a look at Facebook, FB. And you can see Facebook looks like I did anchor it, and you can see the 38, 50, and 61, how the machine flipped the numbers. Because sometimes, I just draw fast enough. Not really looking for either 61 to print here or 38. Vice versa, when we're looking to come back up, we look for the 38, 50, and 61 coming down. We look for the 38, 50, 61 coming in. So remember, trade what the charts give you. Let's take a look at the Google. Google reported everybody liked their numbers, but unfortunately it came back to the inside weekly range from Sunday back down. We looked up on Tuesday on the earning report due to the fear factor. Most people sold the stock into the close on Friday. That's Google. NFLX, let's take a look. Netflix on Thursday announced that they're going to increase NFLX. Oops. There we go. They announced that they were going to increase, their basic, from $8.99 to $14.99 in the premium packages. It was side range after the earning report. It felt it was baselining. It looked up. It had a great day on Thursday. Unfortunately, all the bulls got caught in that push up, trying to clear the opposite side, and it fell back down inside the range. So let's see what Netflix does. Let's take a look at Tesla. Tesla reported that couple weeks, and due to the situation in Asia, they're saying that some of their cars need to be recalled. I think it's more of a political thing, that it caused the stocks, to fall down further. And Friday it fell a little bit more. Does Tesla deserve to be here? I don't want to sound good or bad about the company. I don't like the product itself. I like Elon as a person, but I don't like the product. There's a lot of cars out there that do a better job than Tesla, but I think there's better manufacturing companies such as Ford, Toyota, General Motor, Audi, BMW, Volkswagen can create better products, interior, exterior, as well as electronics and safety than what Tesla offers. Okay, so I'm not being biased. I'm just saying a fact. When I put WYNN as well, we had the push down, coming back up. Does WYNN continue higher or not? Let's see. Let's take a look at Boeing, BA. That's the defense sector. In the last 5 days after the nice push up, I think, Boeing around the 135, if things do hold, and election does well, and they're going to sell more of their airlines internationally, and the economy goes back to normal, and oil comes back up, Boeing should come back up. That's Boeing. Let's take a look at the LMT, Lockheed Martin. That's the defense sector. I didn't either anchor the fibs. I will do one here. We can grab the bottom here, or you can grab the Sunday night through. This is the Sunday night area. You grab the high from here. You anchor it right all the way down here. And as you can see, we have the 61 up here. In order to run, you have to clear the 38, 50. In order to continue on the daily chart, the 50 is right here in the 38. So it's just right underneath it a little bit on this Lockheed Martin. And we can do a couple of ETFs. TLT is the bond market for the 20-year Treasury bond. As you can see, if the bond market was going down, why weren't if there's fear, why weren't the bond rallying up? That's an issue. If you look at as well, the dollar sign DXY, it was rallying up. Oops, my mistake. Dollar sign DXY, it was rallying up while all the markets going down. Do we come back and retest the 38, 50, and 61 for the market to continue, or does the dollar rip a little higher and cause the Aussie dollar, Japanese dollar, the Canadian dollar, the European markets to cause it, to become under pressure because they are going on lockdown due to the COVID-19? We can take a look at the slash dollars VXX. This is the banking sector, and the VIX. If you can see the VIX, it rallied up on Monday, Sunday, Tuesday, Wednesday. Thursday came back in. And on Friday, we had an inside range day. Why weren't people buying the VIX? This is more on the bank sector. If I look at the VIX, that's the and you can see it really rallied up and it had an inside day on Friday. If I go to the weekly charts on it, 3-year weekly, we can see those spikes that happened in 2018, that happened in 2019 due to the stuff that was going on in tariff wars. This is the recession from March, or from February till March. Then we fell back down. We are having a higher low in here compared to the prior range, and we have here a lower highs, higher low, and this is a higher high from the prior. Do we continue higher or lower? That's the weekly. Let's go to the 15-day 5-hour. You can see the low here. This is the high. In order for the VIX to come back into normal and things do not fall apart, we got to come back and see the 61 in order for the market to continue up or down. Don't be biased to either side. We're going to trade what we see, and this is why I put the VIX in there. We can take a look at the IEF. I'll put a couple of ETFs, and I want you guys to do that together. This is the Barclays 7-year yield, and you can see it fell down instead of going up because the yield is coming down. The par value of the bond should be going up, but it didn't, okay? And we can take a look at TNX. This is the 10-year Treasury Index. This is a 10-year. It rallied up. And we can take a look at, for example, the QQQ, which is the Nasdaq 100. I'm going to try to give you better ideas how to look at things. These are lower highs in a linear regression channel. Does this reverse and continue, or does it fall on Tuesday? And let's take a look at SPY, which is the ES for SPX, or the E-mini contract. If you can look, the ETF fell down. Does this get a rounded bottom, continue higher, or do we continue lower? That's the SPY. And I will do one more, KBE. And this is the Spider Series Trust Barclay. If you can see, it rounded itself. It started to come back up. Is things changing to come back higher? And we can look at AGG, and I should come back to the VIX and the ES. We'll finish up with this. If you see the Trust Core US aggregation for all the ETFs, aggressive and moderate, we can see it came back down. We had a nice push on Wednesday, and eventually on Wednesday afternoon we sold off. Thursday we had an inside day, and Friday we came back in the same range from the prior weeks. And if I go to the monthly chart here, or the daily chart, you can see that a consolidation range bound in a linear decreasing channel. As long as we can hold the June-July area before the rally, and we can hold this area, then we can continue higher. If not, we can basically fall lower. Let's go to the VIX. And what I'd like to do is basically go back in history. Instead of a 3-year, I'd like to go way back, like I did, in longer video times. Let's go to the maximum. We're going to go, instead of weekly, to the monthly chart. And I'm going to repeat this so you guys don't end up being biased to either side. This is the real estate bubble in 2008, 2009. We had that came back in 2012. That's the Eurozone and the British exit. Then the France here. Then we had a couple more in this area. So this is the 2002, 2001, the Twin Tower, the tech bubble, and the 2003 before we had, the reset coming down. Then we had the 2009. I can go back a little bit more in history. I think it goes till 1987. In 1987, there was only one time spike up, and it took it, until 1990, till the recovery. In 1990, we had a small one, and all the rest were coming back down in a nice rally. So we're going to trade the charts in front of us. Don't be biased to either side, and be open-minded that things can change, and be safe. And once again, if you'd like to check us out, you can check us out at SolsticeATR.com, or you can, DM me on Discord or on Twitter. That's my handle. and I will go back to this chart to make sure you can pause the video, take a look at it, take a look at all these ETFs, all these equities in here, trade the charts in front of you. Okay, hope this was helpful. I look forward to seeing you next week, and take care.